it's a simple analogy there is, people don't go shopping for a home loan, right? They go shopping for a house. Home loan just happens to be an enabler.
Yeah.
It's exactly, you just take that and, you would want the business to focus on their core business, right? And the funding and the money movement and all is there, right? It's there, it's out of the box, it's there 24/7.
Right.
I think that is what transaction banking can really enable.
Hi everyone, welcome to DN Convo Series. I am Sarangi Muralidhar, Senior Product Manager at DataNimbus. DN Convo Series is all about bringing industry experts, customers or partners sit together with us and have a meaningful conversation about what's next in technology, AI and financial services. Today's topic is right at the intersection of all three of this, which is modernizing transaction banking. Transaction banking has been evolving faster between real-time demands and rising customer expectations. The space is getting reimagined. So the question is, how do banks modernize without ripping out the legacy systems? What role can AI play in this? To kind of unlock all of this, I'm joined by someone who has seen it all from both the sides, the complex systems, while leading modern digital transactions in the area. Please join me in welcoming Mr. Nilesh Chaudhary, Head of Corporate and Commercial Banking Technology at Kotak Mahindra Bank. It's a real pleasure to have you with us.
Thank you for having me.
It's fair to see that you have seen this industry kind of evolving. You have decades of experience in this. You have led a lot of digital transformations, and you have seen how the regulatory kind of framework evolving, right? So it's fair to see that you have seen the industry changing a lot. What's different now? What do you think is the shift happening in transaction banking now? Because a lot of focus is there, it's evolving. So why is now the momentum, do you think?
I've spent 30 years in transaction banking, and I can say this, there's never a dull day in transaction banking.
Right.
I think what, the key things, facets that are changing, the lines between the experience that an individual gets when they're doing their personal side of the banking, that gets conflated with the experience that they expect at their workplace, and that is where they use a bank systems. The real-time nature of the economy, the real-time nature of money movement, the concept of tokenizing an asset, whether it's CBDCs or any other crypto assets, the global economy getting knit even more closer, becoming more interdependent.
Right.
That is kind of putting a lot of focus on transaction banking coming closer to the experience that a retail person expects to be, that your bank needs to be there all the time.
Right.
You pick up the phone and you have a dial tone. Your bank has to be there at all times. You're expecting real-time updates on payments. You're expecting real-time updates on reports, balances, currency positions.
Right.
And I think that's really what is changing now. From a system standpoint, you spoke about legacy in your introduction.
Right.
The legacy systems would have been designed for, let's call it the 9 to 5:30 world, right? The expectation now is it's a 24/7 world.
Right.
And I think that's where the key differences are.
Yeah. So would you say the shift is driven more by this rising customer expectation or some macroeconomic trends like ISO 20022? We keep hearing all of that, right? So would you say it's a mix of both, or it's predominantly due to one?
I think it's a mix of both, but it's more the latter.
Yeah.
The fact that the nature of how we do business today globally is really changing. The interdependencies and an event that happens one part of the world has a immediate impact around the world. It operates around the world the next day. You see stock markets in Asia opening at whatever high or low levels based on what may happen the previous evening in the US.
Right.
That doubled with personal technology.
Right.
So that is where the the individual's expectations come in, whether it's the treasurer or the CFO or a promoter of a company, or it is the individuals, employees in those large corporates that are using the bank system for their day-to-day work, right?
Yeah.
You expect to have the same capabilities
Everything
at
instant.
work that you get on your phone.
Right, everything instant.
Yeah, everything instant.
Yeah.
That's right.
Yeah. So you have worked across different regions. You have seen how different banks kind of adapt to it from a region perspective, right? So do you think there is a difference in the way banks across the globe operates in this space?
I don't think that it's very different because the needs and asks are the same. Regulations are largely in sync globally.
Right.
Regulators also are focused on how do they take care of their own jurisdictions to prevent shock.
Right.
And make sure that they can do their core responsibility of assuring the stability of the financial systems in their jurisdictions.
Right.
So regulations also largely move hand in hand.
Okay.
While regulation
Yeah.
is
Standard,
is largely standard or goes hand in hand, the banks really do not have much of a difference. Of course, it depends on the bank that operates at a global scale versus a bank that might be focused on a given region or a given country.
Right.
Right. But at the end of the day, it's a network of banks.
Right.
So there isn't much of a difference. It all depends on the tech quotient, the innovation quotient of that institution in terms of how fast or they're moving and in which direction they're going.
Right, right. Since you spoke about innovation, it's kind of an eternal question in banking, I would say, like, how do you balance innovation with compliance? Because we all know that compliance is kind of non-negotiable, and we all understand why it's non-negotiable. But then sometimes when innovation comes, it's very disruptive in nature, right? So how do you kind of balance it?
Our philosophy, even at Kotak, is it's not innovation against regulation or compliance.
Yeah.
It's one after the other. Right, in that case, it's not a competition between should I do innovation or I can't do innovation because I have all this regulatory burden. No, regulation is not a burden.
Right.
It's if you are complying with those regulations and you are number one to get there, it is as good as having a competitive advantage.
Right.
Right, because then you are able to be assured of the fact that you're managing your risks. Right, you are providing safe products.
Right.
Safe services, compliant services to your customers,
right.
And that allows you to innovate even much faster.
Right.
Right.
Absolutely.
So of course you have to get your stack right. You need to get your architecture right. You need to have some foresight when you design your platforms.
Right.
Right. You need to see how you can comply from the start, as opposed to the compliance being a bolt-on after you've delivered a product, right? So you have to get some of those fundamentals right. But in my view, and our position is as simple as that, right? That if you are number one to comply, you can innovate faster. It's not one against the other.
Right. That really is very insightful, I would say, because then you are ahead of the curve, So that brings me to my next question about strategy. We all know that banks are anchored by legacy systems, and when it comes to modernization, you don't really want to rebuild it or rip it apart. You would want to kind of strategize in such a way that you get the benefit without going through a complete rebuild. So have you seen, from a strategy point of view, have you seen some things working out in this space?
That's a very interesting question, because that is a perennial thing that no matter which bank or which company you work for, getting that balance right is important. If you are an early stage concern or a startup, you are actually focused vertically and you have more choices to make. The choices are a little easier, I would say, in terms of what you build versus what you buy and how you go about with it. But if you're a sprawling conglomerate providing different services, like in our case, we are providing literally cradle to grave kind of financial capabilities that any individual will need, throughout, whether they're a business and in their personal lives. Those things will always have multiple priorities, and things have grown over time, some organically, some by design.
Right.
There is no right answer. For example, you can't afford to say, I'm going to build this great thing, and then for 6 months there is nothing else that's happening except this, right?
Yeah.
There are commercial considerations as well. At the end of the day, whether you are a technology company, whether you're a technology company with a banking license, or you're a bank, you're at the end of the day a commercial concern. Right. So business cases have to be strong. You need to be able to get the right return on investment right? I mean,
Right.
every decision you take on a day-to-day basis is a trade-off between how much tech debt you are going to build or not build or avoid.
Right.
Right. So in my view, getting that balance right now, in terms of when do you take a call to build and buy. So your reasoning around what you should build versus what you should buy, and those principles have to be clear. So
Right.
you can apply those principles and stay consistent with those principles. That allows you to manage the amount of technology debt that you take on, while you make sure that you also meet the commercial considerations of that entire
Right.
proposal.
Yeah.
Right.
Yeah.
So you could look at being opportunistic about transformation. So
Yeah.
you have to do X, as you said in the previous question. There is a regulation you need to comply
Yeah.
with. There is a new product launch you need to do. Could you actually use that as an opportunity to transform? It might still mean something that you can do in a week might take like 3 weeks to do,
Right.
but maybe that's a trade-off you're willing to take. It is not just about going to market. That is just the first step. So
Yeah.
you could go to market in a week, but actually being able to iterate after you have gone live,
Yeah.
or be able to try things that your customers or build in the feedback that your customers are giving in,
Yeah.
to actually land the product in the right way.
Right.
And stay ahead of your competition all the time, because you put
Yeah.
something new and competition is going
Yeah,
to catch up.
absolutely.
So if your rate of change after that early go to market is going to be slow, you're going to lose the advantage sooner rather than later.
Right.
So you might be better off saying, let's wait for 3 weeks and get something out that we can really move faster on, so we get a longer runway
Yeah.
to
Yeah.
sweat this asset that we are building in terms of the value we bring our
Value,
customers
yeah.
and the value it adds to the business.
Yeah.
Right? In my view, actually being opportunistic about transformation is one way, where
Yeah.
you find the right opportunities and move, and because that gives you the business case.
Right.
Because if you have to put everything else aside and just go and build something new or to rip something out, it means that you've anyway woken up late.
Yeah.
You should have never ended up in a situation where you've reached a stage where you say, no, I just can't do anything here, I have to go build on your own, right?
Yeah.
So actually, that is where you're becoming more responsive and less
Yeah.
proactive. So
Correct.
that's where the opportunistic bit I think really helps, where you take every opportunity you have and figure out how you can move towards your North Star.
Right.
With the opportunity you get. I think that's the better
It's
way
like
to
a
get,
balance that you have to
balance,
find.
right?
Yeah. So do you think with AI evolving, right? I mean, it's no longer just a buzzword. We are actually seeing the outcomes coming out of AI. So do you think AI can really help in this transformation, especially in terms of cash management, predictive analysis, and things like that, right? Do you think would it be able to kind of help as navigating the legacy systems, and like you rightly now mentioned, right? It's all about innovation and moving forward. Can AI help in this one? What do you think?
So see, AI can definitely help move faster. Right? It won't be an answer to everything,
Yeah.
but it can definitely help move faster, right? In terms of providing new products and features. Now people expect something on their personal
Yeah.
device; they want the same experience at their workplace,
Yeah.
right? It's the same thing, right? You are able to do XYZ things on your personal device with AI models that are available. You would expect the same thing, or
Right.
a corporate, whether it's a promoter, CFO, CEO, or the treasury operations person sitting on our large corporate side, will expect similar kind of capabilities to be available, right? As you're
Yeah.
saying, if you're looking at a report for cash flow forecasting, could you query your cash
Yeah.
flow forecast in natural language?
Right.
And so that would give the opportunity to make newer products and services available, and that would be an opportunity.
Correct.
To your point, right?
Yeah.
Now your legacy system may not itself directly lend itself to a capability of these kinds, right?
Yeah.
So you have to get your data strategy right. Right, and I think getting data in one place to be able to do all these correlations
Right.
is actually extremely important in
Yeah.
terms of saying how could I provide AI-enabled capabilities and services to my customers, right?
Right.
So that could be one part that helps you make the right business cases to say this is the reason we need to have a data strategy, correct?
Yeah.
so that we can provide data-enabled, or we can provide data-enabled products and services.
Right.
AI being one of those.
Yeah.
Right. The other part, of course, is can I use AI to take the right decisions? Our developer community is actually using AI to understand our legacy systems better, to understand the legacy code that is there. Because if you were to rewrite it, or you were to hollow it out, so that you're not like doing a big bang change, you're hollowing out capabilities, you need to understand the capability that has been built over 10 years time, right, with so many hands and so many minds in it. AI will definitely help get a better understanding, and it will help you make lesser mistakes. And you don't have to go running around finding, getting somebody to rewrite the requirements. Right?
Just a query, and
you could just query. You could, turn code to specs.
Right.
Look at those specs. And then see whether that is the spec we want to go with, or you want to redefine it. Right? You obviously don't want to build the same thing that you had on your legacy stack in a newer stack. You would want to use that opportunity to revisit processes, revisit services, and see whether there is a need for a change, or you can use other technologies to make certain steps in the process redundant, right? Or introduce newer ones, because you could get things moving faster. Right?
So it's no longer just about cost efficiency, it's about making smarter decisions.
That's correct.
Right?
Of course, but the decisions are still that of a human being.
Right? I mean, of course, guardrails are needed. That definitely. So, some of the recent use cases that are emerging, like ESG linked finance or programmable payments, or even cross-border B2B, right? Do you think it will have an impact on transaction banking?
Oh, it will have a tremendous impact on transaction banking, right? Especially like the way money moves, how value flows. You have multiple options now, right? It's not just based on a correspondent banking, one-way flow or those kinds, right? You have all sorts of players and all sorts of payment rails coming up, right? At the end of the day, if you're a payment service provider, which all banks are, right? How will you measure your reach? One way to do that is, I can move money from one store of value to another store of value. Stores of values are, not limited to accounts. They can be anything, right? They can be a wallet that is digital money, a wallet that has CBDCs, a wallet that has, tokenized assets.
Right.
So how can I move money from one store of value to another store of value? Right? Can I be the payment rails to make sure that I am the institution that does this, right? So as all of these evolves, transaction banking, there is a big impact on transaction banking, right? To our original point about the global economy integrating far more, and expectations becoming 24/7, right? And of course, you have other considerations like capital controls that a country will have or a currency will have. Right? How do you make sure that requirements are met without undue delay for the movement of that money? So you are ensuring that you have the right documentation. Take the FEMA regulations in India, right? How much of that can you ensure you get right straight away, and yet make sure that it's a seamless experience for both the parties that are part of that transaction.
We have talked about what's happening now, what's working, and how banks are actually adapting. I would kind of like to end it on a futuristic note. So if you want to make a prediction, I would say, about one technological trend in the next decade or so is really going to redefine the space, what would you think it would be?
I think the concept of distributed ledgers, and I'm not just talking about blockchain, it's one kind of distributed ledger, right? But the concept of distributed ledgers, I think, will be something to really look out for. It will redefine how value is stored and moved around. To give you an example, you have a ledger today. The core banking system of the bank will is what you would say is a ledger. That's where you have an account and you're seeing your debits, credits, and closing balances and opening balances and stuff like that, right? Talking about what if that ledger were distributed?
Okay.
Right? What if you had parts of the ledger sitting in on the customer side? Distributed ledger technologies like blockchain are playing in that space. But how do you do that in a safe and secure mechanism, right? If you're putting your life savings on some internet resource, you will think like 10 times before you do that, right? So how do you ensure that that happens, right? At the end of the
Yeah.
day, one of the biggest thing that a bank does, we are in the business of trust,
Right, trust is everything.
right? If people lose trust in your institution, that's a big challenge for any bank,
Right.
right? So how do we ensure that that trust remains while you adopt these technologies? But there will be a lot of these things in terms of distributed ledgers, coupled with tokenization
Yeah.
of assets, and CBDCs as a form of store of value as well. I think that will be something to look out for. I can't say where it will go.
Yeah.
My guess would be as good as anyone else's
Yeah.
in terms of where it will land up. But that
Yeah.
is clearly one technology to look for, right?
Yeah. Thank you. That's a very powerful way to end on. So, I would say the key takeaway is that transaction banking is not just going to be more fast or more digital, it's going to be more smart, more connected, and probably more adaptable. I think that's the key takeaway I'm taking from this conversation. So, do you have more insights for us in that?
Yeah, I think transaction banking is very close to my heart. As I said, I've spent a bulk of my career in transaction banking. It is also, I feel, the real enabler for any economy, right?
Yeah.
At the end of the day, it is enabling businesses to grow.
Yeah.
Right? Whether you are giving working capital, whether you are allowing them better cash flow management, better way of managing their money, investing their money, right? You are actually funding businesses, and businesses, these small and medium businesses, are the heart of any economy,
Right. Yeah.
right? So actually providing transaction banking services, you want that business to focus on their core business. That is when
Right.
they're going to generate value. They're going to generate more jobs. They're going to help the economy grow. That's how we are going to become from 5 trillion to a 10 trillion economy.
Yeah.
This is where the magic sauce is. You would want those businesses to focus on the value they create.
Yeah.
Not really be bothered about where is my money? Am I using it appropriately?
Yeah.
Now I need to go apply for a loan. They should be doing what they need to do. The bank should just be there.
Yeah.
And that is what transaction
Yeah.
banking will actually enable. So
Yeah.
it has to keep up with that kind of things, right?
Right.
It's a simple analogy there is, people don't go shopping for a home loan, right? They go shopping for a house. Home loan just happens to be an
Yeah.
enabler.
Yeah.
It's exactly, you just take that and, you would want the business to focus on their core business.
Yeah.
Right? And the funding and the money movement and all is there. Right?
Right.
It's there, it's out of the box, it's there
Yeah.
24/7.
Right.
I think that is what transaction banking can really enable.
Yeah. So it's an enabler.
It is absolutely an
Yeah.
enabler.
That's a great way to kind of think about it. Thank you so much, Nilesh. It has been wonderful chatting with you, and thanks for sharing your vision with us. And I'm sure that a lot of our audience is really gonna benefit from it. Thank you so much.
Thanks very much. Yeah.
Thanks to everyone for listening into this episode. We'll see you again. Thank you. Bye.